Welcome back to Not Financial Advice. So, to start this video, I have a question for you. What if you could travel back in time to 1988 or even a few years before that and have the opportunity to invest into Coca-Cola stock at or before the time in which Warren Buffett did? What would your investment portfolio look like today? What would your investment returns consist of as contrasted by the index over the last 40 years? That's what we're going to be taking a look at today in our analysis of KOF, which is known colloquially as Mexican Coke. So, KOF is the world's largest bottler of Coca Cola outside of the United States. So I'm going to ask you to go ahead and like the video. And if you haven't already, subscribe to the channel so you can be notified when I bring you more informative value investing content. And we're going to get right into it. So today we're taking a look at the stock of KOF, also known as Mexican Coke. And if we take a look just here at the price on Google, we can see here that there's been times, as always, where the stock has been overvalued and the stock may have been undervalued. And we have some reason to believe that this stock may be currently undervalued. So it's currently trading at $84. Let's take a look at what's going on in the last 5 years on the price of this stock. So Mexican Coke KOF is up 38% over the last 5 years, which is something like 6 or 7% a year, but also with a large 4 to 5% dividend yield. So, we're looking at something like 10% returns over the last 5 years, which is pretty good. But the question is, we understand the price of the stock is $84. What's it actually worth on a per share basis? Let's get over into Qualtrim as always and take a look at some different metrics that matter. And as always, Qualtrim is a suite of software that I use to look at stocks, but I'm not affiliated with Qualtrim in any way. So I will leave a link in the description below if you're interested in utilizing Qualtrim to look at stocks on your own. So, right off the bat, what I've just highlighted, a current dividend yield of around 4%. This payout ratio, I believe, is incorrect. So we'll take a look at that somewhere else. But keep in mind, this is going to be in Mexican pesos, and so I've done that conversion. And this is another time to think about this in a different way. So if you're an investor or a value investor, or you've been thinking about investing in individual stocks, like me, you've probably watched a dozen plus hours of pure Warren Buffett interviews and content. And in that time, I've learned a lot of things, but there are two particular things I took away from watching him speak that are relevant for today's review of KOF stock. And so, what Buffett shared is when he was a kid or a teen or in his early 20s, he would go to the library or have this publication delivered to his house. It's just come to me. The name of the publication was Value Line. And so it's kind of like the Kelly Blue Book for stocks. And so he would sit down and go through in black and white ink on paper the performance, annual or quarterly performance of different stocks. And he could sit down, and a phrase that may have been misattributed to him or maybe not, just a general phrase in investing is that whoever turns over the most stones wins. And so in the past, in the 30s, 40s, 50s, you could look through Value Line and you could find mispriced securities. Now we all have the internet. And so the question is, can we find stocks that are undervalued? Is the market always efficient? And so I think that I found one, and I'm going to make that case to you. So the barrier is it's easy to buy VOO or to buy the S&P 500. It's easy to buy QQQ. It's easy to buy Google, but people are lazy. We know this. And simply converting these numbers from Mexican pesos into US dollars, we can find a security here that doesn't have as much attention on it. When you have less attention on a stock, there's a greater chance that it may be mispriced. And so I'm pretty excited about this if you can't tell. So that's why I'm going to ask you again to like the video and subscribe to the channel. And let's just get right into it. So we're going to look at the value of this stock. So currently trading at a forward PE of 14.6, which is low. They have some cash, they have some debt. It does not look out of line by any means. A strong current dividend yield. And now we're going to get into some other things here. We're going to look at the revenue of the company on an annual basis. Let's start there. So, what we can see here is over the last 10 years, KOF or Mexican Coke has had an increase in revenue of 4.4% on an annual basis. Now, to remind you, over the last 10 years, the revenue growth of Pepsi is closer to 4%, and the revenue growth of American Coca-Cola is closer to probably about 2.5%. And so, what we have here is the opportunity to potentially buy what Joseph Carlson has referred to as a toll booth company. And so, this company holds a license to the magic recipe of Coke. They license it likely to other people, and they have a syrup and some water and some machines to carbonate it. And so they're collecting a toll just on this great taste of Coca Cola. And in my opinion, Mexican Coke is better than corn syrup US Coke. So we have a company that's growing at 4.4%, which is pretty huge for consumer defensive. But we have to understand that the population of Latin America, where Mexican Coke operates, is higher. And so we have some really great growth here at 4.4% annualized over the last 10 years on average. Remember that. We're going to use that for our rough DCF estimate. So, as far as this stock goes, when it comes to revenue growth, that's a check mark. Um, let's make sure we don't skip ahead and let's take a look and see how this stock has performed during recessions in the past. So, from 1999 to 2003, they went from a number of 14 to a number of 35 in Mexican pesos. So they 2x during the tech bubble recession. Banking crisis, international financial crisis, we're going to look from 2007, a number of 69 to 2011, 124. So almost a doubling there as well. We'll take a look at what happened during the COVID crash. And so 183 to 226. So this is a recession resistant stock, and that's something that we certainly like to see. Now, what's most important is cash flow or free cash flow. So let's take a peek at this, and we can see that it's up and to the right. Um, over the last 10 years, the cash flow of this company has grown at a more moderate 2.7%. But we can see looking from, and this is a time when people are staying at home and buying more staples. So this is an outlier, but we can see here in Mexican pesos, 18 billion in free cash flow of Mexican pesos in 22. And then going back 10 years, uh, go, going back in 10 years, this is 22 was 18 billion, back 10 years, 13.7 billion. So we can see some natural organic free cash flow growth. I think there have been a few acquisitions, but for the most part, this is just true blue free cash flow growth. The free cash flow chart in this company looks quite good. So that's going to be another check mark on this company. Let's continue to take a look at other metrics that matter for this stock. I don't think that we need to get right into it, but this cash and debt here, we can see that they do maintain a level of debt, but they've increased their cash position from 2013 to more recently. It looks like they've about 3x increased their holdings of cash, which is a fantastic thing to see. And so let's also take a look at the dividend on this stock. I do believe the dividend is currently higher than what Qualtrim's showing. We're going to double check on Google. But what we can see here is the dividend growth rate for Coca-Cola stock over the last 10 years is 3.9%. And so over the last 10 years, your dividend hikes or your income have outpaced the pace of inflation. So that's going to be a check mark on the dividends. And let's check two things. Let's check KOF div yield. All right. And so what we can see here is, I believe that this number is accurate, 5.5% dividend yield, which is huge. Now, let's also take a second, so we're not skipping ahead, and let's look at the payout ratio. So it's a 5% dividend yield, and the dividend appears to be safe with strong growth. So just taking a look at what their payout ratio is, just because international stocks can be a little bit tricky on Qualtrum, but financial data can be tricky altogether. Another thing that's a hesitation for people buying individual stocks. And so, if you do the work, you can certainly be rewarded, as I have been in this position. But what we're seeing here, just as we scan a payout ratio on the stock of 54%, 57%, 58%. Somewhere says that the payout ratio is 1,000%. I'm going to throw that out as a rounding error. 64%. So the payout ratio on this stock is around 55%, which is considered, for the most part, safe, especially with some of the other strength in the metrics that we see here. So the payout ratio and the dividend and dividend growth, that's a check mark. Let's come right back into Qualtrum and pick up where we left off. So cash and debt looks good. Dividends looks good. Let's take a look at their shares outstanding. And so they have slightly increased their shares outstanding over the last 10 years. This is not great. It is a minor X for this company, not something I'm overly concerned about. A growth of zero point 0.4 over the last 10 years annualized. So that's a light red X mark on KOF stock. So more metrics here rather that matter. So return on capital employed, this is slightly concerning. Um, what we can see here, I believe there was an acquisition around this time, but what we can see here is their return on capital employed over the last 5 years. Its average is less than 10%. So um, there's only so much that you can do with selling cans of soda pop. So this will be another X for the company, but I'm willing to look at everything in its totality, and it doesn't stop me from owning the stock as I do, as I own this stock. So looking at the bottom line profit of this company, it's somewhere around 8%, which is okay. It's kind of a neutral, um, but certainly in this case, for this type of defensive stock, nothing that I'm necessarily concerned about. So let's take a look at the valuation on this stock. Currently trading at about a 14 PE. Um, and that seems to be historically pretty much in line. Okay, so let's keep it pushing, move right along. I'll ask you to like the video, subscribe to the channel if you haven't already. Now, I just wanted to show my work here. So this is going to be the number, I believe, for um, their cash on hand. And so I just wanted to show you that I did that work. But we can go right past that. And then I'm gonna tie this back into the first question that I asked you. What if you could go back in time and buy Coca-Cola at the same or lower valuation as Warren Buffett? That would be pretty remarkable, wouldn't it? So KOF, the brand is international. Coke in North America or Latin America or in Asia, Coke is Coke, and the brand is ubiquitous. It's as familiar to people as Santa Claus, the Easter Bunny, and whoever else, right? Coca-Cola is synonymous and it's recognized in Africa or in Manhattan. It's recognized equally as well. And so we're really buying a franchise. We're buying a brand here. But when Buffett first bought Coke in 1988, we can see that he bought it around a 17 PE. We're currently paying about a 15 PE on Mexican Coke. So I've mentioned that if you're an investor, you've probably watched some Warren Buffett videos. If you haven't, you should watch more. But I would certainly consider myself an acolyte of Warren Buffett, as all good investors in individual stocks should aspire to be. Who's another person who is an acolyte or a, a follower of Buffett's investment philosophy? That's going to be none other than Bill Gates. Smart guy, controversial guy. Don't care about that. I just care about money. So let's look at Bill Gates' charitable trust foundation and his current holdings over here on Datarama. So his biggest position is 32% in Microsoft, company he started. That makes sense. Second biggest position is Berkshire Hathaway. And so Buffett, I'm sure, talked to Warren Buffett about his purchase of Coke, thought about it and mulled it over. And this is where I discovered Mexican Coke, ticker symbol KOF. So within Bill Gates' top 10 holdings, one, two, three, four, five, six, seven, eight, nine. So his ninth largest holding is in fact Mexican Coke, probably for a lot of the reasons that I've already described. The way that he has his portfolio allocated, he has some concentration into Microsoft, Berkshire, and a railroad and waste management. And then after that, everything really drops off. So as far as his secondary holdings, Mexican Coke at 1.25% for his $39 billion portfolio, that's a lot of money. This is not an insignificant holding uh, for Bill Gates, and it's not one that he's seemed to have done much with. Every quarter when I check, he holds it and he holds it in the top 10, and he's not doing anything with it, which is, I think, probably a good sign. So we've all been to a local taco shop or a food truck or even a gas station. Mexican Coke bottled by KOF is sold in the United States. You have the tall, curvaceous, beautiful bottle, glistening glass bottle of Coke. We know that it has cane sugar in it. The taste is a little bit better. Might not be as good for mixing with booze, but all the same, if you did the Coke and Pepsi challenge with people and had them taste US Coke versus Mexican Coke, it's just better. Mexican Coke is better. So we're not going to spend a lot of time here, but I want to. You recognize that glass bottle of Mexican Coke, but if you're an American or a European investor watching this channel, I want you to have a little bit of a better sense from a qualitative standpoint of who this company is if you're considering looking into it. So let's stop right here and see where Mexican Coke or KOF operates. So Mexico, Brazil, probably the largest economy in South America, Central America, there as well, Colombia, there as well. Not in Venezuela. Not in Venezuela, noticeably, where there's a lot of inflation and a lot of political risk. And so the question is, are we looking at something that's apples to apples? So another place you can find value in the stock market is by looking at international stocks. So someone might say, the stock isn't based in the United States. There's there's currency risk, there's geopolitical risk. I buy into that, but just to an extent. The majority of this company's revenue is coming from places like Mexico and Brazil. And so the United States maintains control over the Western hemisphere of the world. Um, do I have a problem buying international stocks? Not always. Would I buy a Middle Eastern telecommunications stock? No, not right now. Would I buy a Taiwanese technology stock? No, not right now. Would I buy a stock from the Western Hemisphere in Latin America where they have good population growth? Yeah, I would. I have, and I did, and I do, and I'm going to continue to. So that's just to get an understanding that international stock might scare some people off. The effort to calculate the value is going to scare people off. And so we're going to very quickly move along to the point of figuring out what is the fair value of this 80 something dollar stock. So the only other thing that I'll mention as we're looking at this, they do sell a beer in South America, so that's something that's a little bit different. Um, and so they sell to restaurants, they sell to grocery stores and gas stations. Something they do that's different than in the States is they allow you to take your empty bottles and go have them refilled at local distribution points, I guess. And they also have an app where they're doing sort of like an Uber Eats type situation. But additionally, KOF, Mexican Coke, think America 1950s milkman. Literally in Mexico and in Latin America, KOF has vans or trucks that will go on a route and literally deliver Mexican Coke in a glass bottle to customers' homes. It's absolutely fascinating. So over 600,000 households in Mexico have a Mexican Coke milkman that comes to their house, maybe not every morning, but maybe every afternoon. Absolutely fascinating. Here's some more stuff. Um, I think we've covered it. So we're going to go back to the price of the stock. At this point, I'll ask you to like the video and subscribe to the channel if you haven't already and you're still with me. But we see the price of the stock being $84. So remember that growth rate that we saw in the stock. I think it was something like 4.4% over the last 10 years. What we're going to do now is we're going to get an idea of the fair value estimate on Mexican Coke KOF's $84 stock. What's it worth on a per share basis using this rough DCF? So an $84 stock. So I've checked my math about 3 times, and you're more than welcome to hold me accountable as well, but what I'm coming up with in American dollars is a free cash flow average over the last 5 years of, $1.6 billion dollars a year in free cash flow. What I'm also seeing is $2.3 billion dollars in cash on hand, $4 billion dollars in debt. I'm seeing 210 million shares, and I've put the growth rate over the next 5 years at 5%, 4%, and 3% with a 10% discount. So price of the stock $84, value of the stock 119. 119. So about 25% undervalued at this time. Let's look at some other things. Let's go ahead and say we need to make 12.5% a year to compensate us for currency or geopolitical risk. Current price of the stock $84 with the higher required rate of return of 12.5%. $84 stock, value of the stock $85. So I hope you've enjoyed this presentation. If you have, make sure to like the video and subscribe on the way out, and I will see you on the next one. Thanks. Bye now.